Hello and welcome to this video. My name is Peter Komolafe, and today I'm going to be taking you through active ETFs. We're going to talk about what they are, what they aim to achieve via their investment mandate. I'm going to show you two very exciting active ETFs that you have available to you right now in the InvestEngine portal. We talk about how you can use active ETFs in your investment approach. We'll talk about costs, fees. I'm also going to signpost you to where you can get more information for your own research. But let's start with the most important thing first. What is an active ETF? Now, an ETF is an exchange traded fund. And if you've been investing for some time, typically you'll come across passive ETFs. An active ETF is the opposite of a passive, where you have a fund manager who makes active decisions around how money is allocated within the ETF with the goal to achieve outperformance against, say, a passive counterpart. It's really that simple. Now, active ETFs have actually grown in popularity. In 2023, according to Morningstar, active ETFs grew organically by 48%. In 2024, looking at some data from BlackRock, almost 41% of the ETFs that were launched were active. So there seems to be a drive towards active ETF because it's seen as an opportunity to be able to get outperformance in a very low cost environment that ETFs are known for. Now, the team at InvestEngine are really passionate about helping you invest, create wealth using the stock market, and achieving your goals. And in doing so, they're working with some of the world's best fund managers, giving you the best tools available. What I want to do in this section of the video is just talk you through two of the world renowned fund managers that they're currently working with in their active range, which you can deploy into your portfolio. And to do this, I'm going to be sharing my screen. So this page is going to be linked in the description. I'd encourage you to go and check this out. But as you can see here, there are three partners. All of them are world renowned. You may recognize their names, but for the purpose of this video, we're going to focus on Fidelity and ARK Invest. Now, when you scroll down, you'll find what active ETFs you have available to you at this point in time. And there's quite a few here. But what I want to do is I want to focus on the Fidelity US Equity Research Enhanced ETF, which is this one right here. And when we click into this, you're going to get some high level performance data right here. And when you scroll down, you'll find that it is an accumulating ETF. So if it has any dividend payments, it's going to be paid into the ETF, not distributed to you. The total expense ratio is 0.2%. And we'll talk a bit about cost later on. You can see it's actively managed as denoted there. Now, I spoke about the fact that with active management, these fund managers are looking to eke out or find outperformance in the portfolio. And how they do this is actually quite subtle. So this active ETF is comparable to, let's just say, the S&P 500 passive ETF. And if you were to compare this to a passive ETF, what you will find that being the difference is how money is allocated across all of the companies that it's invested in. Let's just say, for example, in this particular one, they've allocated 8% to Nvidia, who, by the way, are a big player in the AI space. You may find in the passive S&P 500 ETF that there isn't quite as much allocated to Nvidia. And that's what you're looking for. That's what the fund managers are doing. They're identifying companies that justify having a little bit more money invested in them to really try and get out some outperformance compared to a passive ETF. The next one we're going to do is just going to go back and we are going to go and have a look at the second, which is ARK Invest. Now, ARK Invest is a well known research company, at least they would describe themselves as a research company, and they task themselves with finding the mega trends of tomorrow for investment opportunity. Now, it's held up by a woman called Kathy Wood. She is world renowned. And Kathy has always been passionate about future technology. And you can see that evidenced in the kind of ETFs that are available here on the InvestEngine portal. So you've got artificial intelligence and robotics. We're going to pay attention to this one in particular, because I don't think you can get away from the popularity of AI and the numerous AI tools that have recently been launched and will continue to be launched. But aside from that, you've got innovation, you've got genomics revolution, which is effectively biotech in the medical field. You've got cybersecurity and data privacy, and you've got others down here as well. But let's just jump into this. So AI and robotics. You can see from the performance data here, it's performed extremely well. And this is off the strength of the level of research and expertise of their research over at ARK. They've always prided themselves on being ahead of the game to a certain extent. Again, trying to identify what the future technologies, the future trends are going to be for investment purposes and getting in early to reap that reward. And as you come down here, and I'd encourage you to really have a look at this, you'll see the companies that it's invested in. Most of them with either a foot in AI, a foot in technology, providing services or providing items, things, chips like Taiwan Semiconductors into that industry. So please have a look at this. But this is just an example of a couple of world class fund managers that are currently available to you via this InvestEngine portal that you can deploy into your investment strategy. So I think it's worthwhile talking about how you might be able to deploy active ETFs into your current investment strategy under a blended approach next. When you're investing, it's very easy to think that you either have to do one or the other and that you can't do both at the same time. And the truth is, you have full autonomy. So, just to bring this to life, I'm going to use this visual representation where I'm going to describe to explain how a blended approach might work. Now, you could be in this current situation where most of your money or all of your money is invested in, say, a passive ETF, or let's just say a mutual fund or an index fund. And you may have all of your money in this allocated as your chosen strategy. Now, if you wanted to incorporate active ETFs, a blended approach will entail you doing the following, which is effectively splitting your money across whatever it is you have right now, in this example, a passive ETF and an active ETF. And you get to decide the allocation. So you might decide it's 70% here, 30% here. You might even decide it's 50-50, or you might decide let's turn it on its head and do 60% into into an active and say 40% into a passive. You get full and complete control over how this works. And that is a blended approach. Now, as you've already established from this video, active ETFs are actively managed, which means that you have a fund manager and a team working in the background. That takes time and therefore that costs money. So, as a side by side comparison, in a passive ETF, the typical total expense ratio that you can expect is anywhere between the ranges of 0.1% to 2%. In an active ETF, that range will be somewhere between 0.4% and 2.5%. Now, there's quite a differential there, but I've also seen instances where you can access an active ETF at a lower price point than a passive one. So, what I'm trying to say here is yes, costs and fees are important, but the biggest thing for you to do is research. I would encourage you, where you can, take a few minutes to go and visit this page. It is pinned down below in the comments and also in the description. Go and check out the range that are available from ARK and Fidelity and see what ETFs you might want to put into your current portfolio and enhance your investment strategy. Thank you so much for watching. I'll see you next time.